if they revalue it to 50,000, it would a lot of foreign investors, foreign sovereign holders of treasuries wouldn't be very happy because it would mean the dollars that they hold would be worthless. We could see a war if they did that. So, but what the revaluation, let's say to 3,000 could lead to though, is a move towards 50,000 because I think it would put a rocket up the gold price because right now the statutory price is 42 and the market price is like 70 times that. So if you put the statutory price at 3,000, that same relationship should apply. So no, I don't think they revalue it to 50,000.
A revaluation would benefit the government by increasing the book value of its gold reserves, allowing it to expand its balance sheet, borrow more, and manage debt more effectively. Additionally, it could incentivize increased mining production and boost gold imports. However, this move would weaken the US dollar, as gold is priced in national currencies. MarioInnecco, a senior analyst, suggests that a significant revaluation of the statutory gold price could drive market prices as high as $50,000 per ounce. However, such an extreme adjustment could devalue foreign-held U.S. assets, potentially leading to economic tensions or conflict. Currently, the value of U.S. gold reserves accounts for only about 2% of outstanding treasuries, a stark contrast to historical figures of approximately 17% in the 1970s and nearly 40% in the 1940s. Tavi Costa highlights that if the gold reserves were valued at 17% of outstanding treasuries, gold would need to reach approximately $25,000 per ounce. If the ratio returns to 40%, gold could approach $55,000 per ounce. While these figures are not direct price targets, they illustrate the potential for a significant gold valuation shift. Innecco explains that while no official decision has been made, potential legislation could increase fiat currency supply and higher inflation, likely driving gold prices up as investors seek safety against a declining dollar. Recent economic data shows the US dollar falling to 103.6, nearing 5-month lows amid concerns about slow growth and trade uncertainties. February retail sales rose only 0.2%, below the expected 0.6%, following a revised 1.2% decline in January. In this environment, gold has struggled to gain traction, trading just below all-time highs after briefly surpassing $3,000. The outlook appears bullish as inflationary pressures and economic uncertainties drive demand for safe haven assets. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
What would happen to the price of gold if they were to revalue the statutory price? Because the statutory price right now is still $42.22 or $42 and two ninths. Yeah, technically is two ninths, which is 0.22222. So let's have a look and keep in mind though that up until here, gold was you couldn't trade or buy gold in the United States. So this is the international market. But the first time, well, when they revalued gold from 35 to 38, and I've got the New York Times archive here, and it was March 21st, right here. March 21st is here. 1972, they revalued from 35 to 38. And at the time, the international market price was already 48.70. So gold just kept going up and then it kept going up. And then the next year on February 12th, they had to revalue it again. As you can see here, gold to be revalued February 13th. That was the day after. From 38 to 42 and two ninths. And then the market price was $20 higher from the previous. And then it just kept going up and went up above 100, got back below 100 a little bit here, but we never saw those prices ever again. And why is that? Well, because the statutory price is the price at which the yeah the Treasury is prepared to buy gold. So if you have a statutory price, that means that you have like a put from the government, and they will always buy gold at that price. So, and look at where gold ended up going, almost $900 in the next few years up until 1980. I mean, back down here, it went to like 200 almost in the end of 74. Then it corrected almost 50%. but we've never seen those prices ever again. So they could revalue it maybe a bit lower than the market price right now. They could revalue it to 2,500 or 2,750, but I think the effect would be very bullish. And why is that? Well, the first reason is because that would signify a put, so people would be comfortable with buying gold around 3,000 because it probably will never go below that level. But the other reason, I think it's an admission by the US Treasury and the Fed that gold is really important, that the dollar has lost its shine, so to speak. And after 52 years, they've finally changed that $42.22 price. I think that's the major reason why. And as we saw last time they revalued, yeah, they had to revalue the year after. So, yeah, I think it's very bullish. Again, that bill hasn't been passed. Maybe some of you know a little bit about that bill, whether you think it's going to go through quickly through the Senate and the House. I think if it does go through quickly through both Senate and the House, President Trump will definitely sign it. And I don't see why it shouldn't go through because it means more fiat currency for Congress to spend, and I think both sides of the aisle like that. Yeah, and it would be inflationary. If they revalue it to 50,000, it would a lot of foreign investors, foreign sovereign holders of treasuries wouldn't be very happy because it would mean the dollars that they hold would be worthless. We could see a war if they did that. So, but what the revaluation, let's say to 3,000 could lead to though, is a move towards 50,000 because I think it would put a rocket up the gold price because right now the statutory price is 42 and the market price is like 70 times that. So if you put the statutory price at 3,000, that same relationship should apply. So no, I don't think they revalue it to 50,000.
MarioInnecco suggests that the proposed Bitcoin Strategic Reserve Bill may cover significant changes related to gold, particularly in managing gold certificates held by the Federal Reserve. There is growing speculation that such a bill could be used to facilitate broader shifts in the U.S. financial system, potentially altering the role of gold and introducing new mechanisms for valuation. One of the most ambitious proposals comes from Senator Cynthia Lummis, who suggested that the U.S. Treasury could swap some of its gold reserves for Bitcoin. The United States holds approximately 8,100 tons of gold in its vaults, making it one of the largest gold holders globally. If even a tiny fraction of these reserves were sold and converted into Bitcoin, the U.S. could amass a Bitcoin reserve of around 1 million coins, roughly 5% of the total Bitcoin supply that will ever exist. This idea is notable because a gold for Bitcoin swap could be done without affecting gold's official book value on the Treasury's balance sheet. The Treasury values its gold at $42.222 per ounce, a figure set in 1973 and never updated, resulting in a valuation of about $11 billion. This is far below the current market price of around $2,900 per ounce. Revaluing its gold holdings could significantly enhance perceived value and create financial flexibility for alternative assets like Bitcoin. Let's get back to the interview.
So we'll go through this here. It says Federal Reserve System gold certificates, right? Why they're talking about gold certificates in a Bitcoin reserve, strategic reserve bill? Well, maybe the Bitcoin strategic reserve bill is just a cover so that people don't realize that this is happening with gold. And that's, of course, speculation from my part. Not later than 100 days after the date of enactment of this act, Federal Reserve banks shall tender all outstanding gold certificates in their custody to the Secretary. That's the Secretary of the Treasury. Not later than 90 days after the tender of last such certificates, the Secretary shall issue new gold certificates to the Federal Reserve banks that reflect the fair market value price of the gold held against such certificates by the Treasury as of the date specified by the Secretary on each new gold certificate. Upon issue by the Secretary, each Federal Reserve Bank that receives a new gold certificate shall remit the difference in cash value between the old and new gold certificates to the secretary for deposit in the general fund within 90 days. Well, that's the general treasury fund with the Fed. And it says here, confirming amendment section blah 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 blah. U.S. code is amended by striking for the purpose of issuing those certificates of 42 and 2/9 dollar of fine troy ounce. So they would strike that and put the new price. The old price, of course, is 42 and 2/9, which is 42.22222. It's all twos, 2/9. So what does that mean? Well, Eric Young has another post here, which is really interesting. And then we're going to look at what it could mean to the price. He says, guess why the bill says each Federal Reserve Bank that receives a new gold certificate shall remit the difference in cash value between the old and the new gold certificates to the Secretary for deposit in the general fund within 90 days. Well, he says because the US government will have to buy the old gold certificates from the Fed. They'll buy it at 42.22, and then they'll sell the new gold certificates to the Fed at, let's say, $3,000 and get the cash difference. But it will most likely be done in a single accounting entry, and the cash remittance to the Treasury general account will be the difference in cash value between the old and the new gold certificates. So I think the difference is something like 800 billion, $700 billion, which would be a good amount for the Treasury account at the Fed. So yeah, there's no gold sold. There's nothing really. It's just a bookkeeping entry. But the reason why all the gold is flowing into the U.S. is because these Federal Reserve regional banks, they leased it all out, it looks like, or they leased a big chunk of it out.
As discussions surrounding gold revaluation and alternative asset strategies gain momentum, the potential for a significant shift in financial policies remains a key focus. Adjusting the valuation of gold reserves could significantly impact national debt management, monetary supply, and economic stability. Meanwhile, proposals involving digital assets introduce new possibilities for diversifying financial reserves. As markets navigate these evolving dynamics, the intersection of traditional safe haven assets and emerging financial strategies may shape the future of global economic policies. Could a significant gold revaluation redefine monetary policies, or will digital assets be more central in future financial strategies? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.